Welcome to today's Hawkeye Insider. My name is Mike Smith. Delighted you could join us today. We're going to start off by looking at one of three things. First of all, we're going to look at the S&P 500 on a daily chart, just to get context about where we are now. I've extended this significantly right back to June 2014. So you can see exactly where we are and why the key levels are as we've been talking about. You can see that the pivot lows we hit here were actually tested once and then broken again. So that was around 1875, and really we're heading down. Although there was some recovery over the last 2 or 3 days, Janet Yellen, with her cautious comments during her testimony, certainly upset the markets last night. We ended up at the lows of the session, complete reversal from the gains that have been made earlier in the day, and futures are looking pretty bleak based on poor response from Asia and subsequently from Europe. So at this stage we're about 1.7 down on the S&P 500 pre-market, which is going to take us around this sort of 1820 level we suspect. 1840 we've been keeping an eye on, but really 1800 is the key level. If we break these pivot lows that we see here and from October 2014, then test 1800 and break through that, then really we're in territory which is going to push us down further as further selling occurs. We are still around about 150 points away from bear market territory on the S&P 500, but certainly a break of 1800 could see us down to 1700, which would push us into bear market territory. Now, whether that happens or not is, of course, in the lap of the market gods, but technically there appears to be little holding it up unless we see some institutional buying based on potential value at this level. So that 1800 mark appears to be quite critical. What this is doing to the rest of the market, we're seeing precious metals move up, we're seeing some interesting movements in the currencies, and of course US Treasury yields are dropping, and which means of course the treasuries themselves are going up in value. So that's where the S&P 500 is. Now let's move to the currency markets. Let's look at the Euro US. And I'm really just going to have a look at the daily chart. We talked about this for those of you who were on the session last night, about 114 being a key level. I always recommend that you would have a look at the daily chart on whatever currency pairing you're trading, as this could be crucial in terms of recognizing the key lines in the sand. This is a live chart, so it is moving up and down, as you'll see. So we're currently at 1.1331 on the Euro versus USD. That 114 is that key level that we see there. It didn't quite get up to there today, but certainly is still in the top third of the bar. This pivot high we see here looks crucial. If we spend any time over that, we could see this buying momentum we see on the daily chart continue, and a push to test this level, and then potentially we could be up around the 116 as the next stopping point. And certainly that, although it would be unusual to see markets in distress and the US dollar getting weaker against currencies, that appears to be the case here, simply because of the decreased likelihood of the Fed raising interest rates significantly during 2016. So if we take this down to a 60-minute chart, you'll see the buying momentum appears to be waning a little bit. We have a wide bar. There's a classic wide bar pattern we see here. That we had the wide bar 6 hours ago, and since then, of course, we've failed to not only break the top of the wide bar, but also intra-bar there. Though we did test it, we ended up back within the bar itself. It looks as though there's some uncertainty there. We've seen selling volume coming in on the last bar. So there isn't the compelling reason at this stage to push it higher than 1350. Than 11350. Of course, US market open may have something to say about that, and additionally we do have, which is in about 30 minutes time from here, from when we're talking. So look to that level as I'll recognize that if we do see a move over the top of this wide bar, then there's a potential scalping trade there up to around about 1.14, but that may be all that's left in this particular trade for now, unless we get something major happening in the equity markets. As I said, historically, if the equity markets are in distress, traditionally buying has gone into the US dollar, not out of the US dollar. So we might turn round to that norm at some stage. So just be careful about that. It may even be prudent to trade a tighter time frame than 60 minutes as your fastest time frame. So having said all that, let's look at a particular trade we're having a look at, which is not unrelated. We are looking at precious metals, and we have chosen, as you'll see by this chart, to look at silver and the ETF which holds physical silver, SLV, rather than a silver stock itself. It's a pure play, and obviously this would suit equities traders and options traders respectively. Just to talk through this chart, we will see green buy volume coming in on market open, and we are likely to show a move over this critical $15 level. You'll see all the pivots around about $15 we see there. So even though the line's at about $14.95, we want to see a break of 15, which gives us an upside of around about 3% in the first instance. From an options point of view, 3% on the underlying is going to be quite profitable. We might look at a straight bought call on precious metals. If we look at the 2-day chart, you'll see that will also, a move above this pivot high will also take us above the top of this wide bar. So that's a fit. And we've got buying volume on the 2-day, buying volume on the weekly. And as I said, we are likely to see buying volume here. So although we like the idea of precious metals, we'd probably wait until around about the middle of the day, let that first hour of nonsense get over with, and then if the price is trading above 15, we might be tempted to place an entry at that stage. If the market's very choppy and you're watching it live, then it might be prudent to wait till the last hour to see confirmation that that bar is going to finish above this key level. But that would be our potential trade of the day for ETF, equity and options traders. We've talked EURUSD. I've given you my take on the level to look out for, and of course keep an eye on the S&P 500 as a whole for that key level, because if we break that 1800, then it may precipitate significant additional selling, which is obviously going to affect currencies and equities stroke precious metals. Trust that's been useful. Hope it gives you a little insight into some of the things we're thinking about, and we look forward to seeing you again soon. Bye bye for now.